Good morning and welcome to the first markets update from ADS Securities this week. During the Asian session today, there were no economic releases across the session. However, the volatility picked up further, especially in Aussie and Kiwi pairs. The New Zealand dollar fell across the board, declining the most against the US dollar and the euro. The currency also fell by an average of 1% against the major currencies. These declines came in after the Prime Minister stated that the Reserve Bank of New Zealand has intervened aggressively in August. He also mentioned that the New Zealand dollar remains overvalued, and this has been agreed with the Reserve Bank of New Zealand. He also mentioned that the golden price for the Kiwi is around 65 cents, and this was the catalyst for the Kiwi pairs to break lower across the board today. Going forward to the European session today, there are a collection of economic releases across the day, which are likely to have a notable impact on the markets. Beginning with Germany, the monthly CPI is expected to decline by 0.1% in September, comparing to no change in August. However, the year-over-year CPI is likely to remain stable at 0.8%. In Spain, the year-over-year CPI also may decline for the third month in a row by 0.3% in September, comparing to another decline of 0.5% in August. In the UK, the net lending to individuals may decline slightly back to £3.1 billion in August, down from £3.4 billion in July. However, it remains near the highest level since 2008. Finally, the mortgages approval may decline slightly to 66,000 in August, down from 67,000 in July, which would be the first monthly decline in over 2 months. As for the US session today, a collection of economic figures will be released as well today, and which may have a notable impact on the market as well. Beginning with the Core PCE Price Index, the estimates are to remain unchanged in August after a slight increase of 0.1% in July. However, the good news may come in from the spending and the income figures. The US personal spending set to rise by 0.5% in August after a decline of 0.1% in July, which would be the highest monthly increase since March of this year. The personal income may also rise by 0.3% in August, comparing to a rise of 0.2% in July. Finally, from the housing sector, the US pending home sales may decline by 0.4% in August, comparing to a rise of 3.3% in July. However, the year-over-year pending home sales may post its 11th monthly decline in a row by 1.4% in August, but slightly also better than July's figures, which showed a decline of 2.7%. It's almost the end of the month, and the US dollar rally is gaining more momentum. However, the index is approaching a significant level around 86.11. This would be the highest level since 2010, but most importantly, it would also represent a long-term downtrend line resistance, as shown on the chart. A monthly close well above that resistance likely to clear the way for another rally in October. Therefore, traders needs to keep an eye on the monthly close tomorrow. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.